Well, it was a dull session, which isn't a surprise after a three-day weekend and, of course, this major rally and then ahead of this big jobs report. But this gives us a chance to evaluate the market. And I will say that the numbers are in and they have been very impressive. Your first quarter earnings, enormous for corporate America, and things are looking better even moving forward. Here's your report card. 98% of companies have reported. 64% have beat on revenue. Blended earnings up 7.7%, the highest since the second quarter of 2011. Third quarter in a row of year-over-year increases on the top line. Remember, that was a big problem. 75% of these earnings beat the five-year average. Overall, your blended growth rate, almost 14%. That is the highest since the third quarter of 2011. Looking ahead, while the blistering pace of the first quarter is going to ease just a little bit, this is looking like it's going to be a huge year for the top and bottom line. These numbers are accumulated, by the way, by facts that I think they're conservative. So the rally has been justified, and more upside is not unreasonable. I do think, though, that the secret sauce for the second half of 2017 will be higher wages and greater consumer spending. Remember, the consumer is 70% of the economy, so higher wages will allow people to spend more. By the way, this rationale is backed up by today's data. In April, spending was up 0.4%. March was revised from unchanged to up 0.3%. So clearly we're building momentum. By the way, we had a 0.4% increase in income, and that was masked because I got to tell you something. In March, what they call domestic government social insurance, it surged. It was $1.3 trillion. That subtracts from total income. So the fact of the matter is that wages and salaries are up 0.6% in April. That is a lot. This data matches very well, by the way, with a report from Fair Isaacs that says that the average U.S. credit score has climbed to 700. That is the highest since 2005. Consumers now starting to use those higher credit scores, including a greater increase in credit card use. As for the Trump economic agenda, part of the reason we need lower wages and fewer regulations is to engender a certain kind of confidence. Well, right now, confidence is there. In fact, it's hanging in there, and some Republicans should take note. Folks that earn $15,000 or less, their confidence level at a 16-year high. One could argue that proposed policies that help the rich, well, maybe not so much. Maybe they're stirring major excitement in the lower income and lower middle class folks who now see a chance for prosperity instead of the usual globalist. Speaking of which, earlier I asked on the show and on Twitter all day, Goldman Sachs investing $2.8 billion in Venezuelan bonds. The question is that a good investment or a blood money? A lot of you guys tweeted at me saying, well, one person said, listen, it's about big banks, cash and economy, then buy it up for pennies on the dollar. The rich get richer. But on the other hand, someone else simply said, quote, Goldman didn't destroy Venezuela. Most of you thought or think it's blood money.